Okay, not the most exciting of topics, I appreciate. But here we go, sustainability assurance. So doing an audit, but doing an audit on how sustainable a company is. So the scope of it is, this is when you're giving assurance on any sustainability topic there is. And it's over information that's based on any sort of framework, the Global Reporting Initiative, the International Integrated Reporting Framework, IFRS S1 and S2, whatever it is what we call framework neutral. So you can use it for anything. So far, so good. In terms of what sort of assurance you can either give limited, which, if you remember, is there's nothing that's come to our attention to say that anything is wrong. So you would use less extensive procedures, focusing on analytical procedures, or you could give reasonable assurance, where it's a positive assurance, isn't it? Like a proper audit. And that would mean more extensive risk assessment, control testing, which you wouldn't do in limited, and substantive testing. Come back to that in a bit as well. Okay, so should we accept this assurance job? Well, are we competent and do we have the resources in sustainability matters? Come back to that in a bit as well. Is the entity that we're auditing, that we're giving assurance over, is that appropriate for assurance? Have they got enough management commitment to do it properly, to have enough data available to do it properly before we even go and audit them? Risk assessment, if it's limited, then we're not going to evaluate internal controls. We're going to have lots of interviews with management and looking for trends, looking at analytical procedures. So an example there, for limited insurance on employee diversity metrics, then you might review HR reports, conduct interviews, that's a big one, interviews, and compare your percentages to industry percentages, but no testing of controls. When you're doing reasonable assurance, though, you will look at controls, but you look at the risk of material misstatements, like it in audits, on the assertion level, but for sustainability information. You'll understand, as we said, the entity's internal controls, evaluating the design and their controls over the sustainability data. And finally, you'll do some substantive testing, such as looking at emission logs, i.e. data inputs, tracing data to the source documents, and reconciling reported figures to third parties, because we're going to have to rely a lot more on third parties with sustainability reporting. Materiality then, well, materiality just on the sustainability information. And you look at two types. You look at the effect on the financial numbers, okay, so financial materiality, and we look at the effect on the impact on the environment, impact materiality. So you've actually got two materialities. And you've got to think to yourself, well, what matters most to stakeholders when you're thinking about materiality? So if you're looking for materiality for a mining company, the report might look at the direct and energy related emissions over the supply chain emissions, because that's what you think stakeholders are more concerned about. So, it's very subjective, a lot more subjective than normal. You're going to have quantitative, i.e. numbers disclosures. And when you're looking at numbers disclosures and you're thinking about the materiality, think of how big are the misstatements, because the numbers relative to the disclosures. You could use a percentage because they're numbers. And where double materiality is relevant, then you always use the lesser of those, the lesser of the financial and the impact materiality. When you're talking about qualitative, though, they're a lot more subjective. So you're saying to yourself, are these disclosures accurate and complete? You're saying to yourself, is it missing any information? Then you're saying to yourself the opposite. Is there too much information obscuring the view, trying to obscure other things? Is there been compliance with any sustainability laws or regulations? And what's the overall number of people affected by this matter? So they're the sort of things you think about when looking at materiality, and whether it's above or under materiality on quantitative and qualitative disclosures. Okay, so we're doing all this to gather evidence. So testing controls, that's when it would give in reasonable assurance. So testing controls over the sustainability processes, e.g. verifying what controls there are for the emissions data being entered into the system, inspecting third-party reports or external data, performing site visits or observations, using analytical procedures to identify trends or anomalies, engaging external experts, because that's probably going to be needed, and address challenges like we will have on the lack of audit trail on the non-financial stuff, because there'll be lots of estimates, lots of subjective judgments, like how badly is society affected. Always have professional skepticism, so critically evaluate the reliability of the sustainable data that you've been given, challenge any assumptions or estimates given to you by management. And you've got to make sure that you're competent, so make sure that you're critical of yourself. Do I have enough expertise in these industry-specific risks? So make sure that I collaborate with specialists, make sure I train, make sure I use lots of CPD. Over on to reporting then. A clear report with a conclusion tailored to the assurance level, i.e. limited, there's nothing that's come to our attention, reasonable, a positive one. So limited assurance, based on our work, nothing has come to our attention that causes us to believe sustainability information is materially misstated. If it's reasonable assurance, like an audit, in our opinion, you give a positive statement here, don't you? In our opinion, the sustainability information is, in all material respects, free from material misstatement. Include a basis for the conclusion, so saying what you've done, what procedures you've performed, what criteria you've applied, has there been any limitations on your work, and highlight significant findings such as control weaknesses, and distinguish the work that you've done on sustainability and any other financial statement work, so you're making it clear for users. So very much like a normal audit, isn't it, really? I want to just do something on challenges. A lack of standardisation, meaning you're looking at all these different sustainability metrics, and because it's framework neutral, there's going to be loads and loads and loads of them. So that's just tricky, isn't it? And they're all kind of linked. You're going to have lots of non-financial data, which often has no audit trails, as we've said, loads of estimates, models, third-party inputs, which makes everything really, really difficult to deal with. So it's for all sizes. So small organisations might not have the controls. Large companies may face challenges because they're trying to cover everything across global organisations, so it becomes difficult. Stakeholders' expectations. So we've got to try and be really rigorous, but give practical limitations. But they always expect really high quality reporting. But they might not understand the constraints that we've got, and they might not understand the difference between limited and reasonable assurance. Resource intensity, which is what we've said all along, really, it's time consuming, it's costly, particularly for reasonable assurance, the positive one, because we're going to need expert site visits, training, addressing data gaps, etc., etc. So lots and lots to think about.